Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and a potential death cross. It's not set in stone yet. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. If you want to know how I'm navigating these markets, check out the sale on the premium list. You can find a link to that in the description below as well, and lock in the lower rate. Let's go ahead and jump in. So it's certainly been a while since we discussed golden crosses and death crosses. And normally when we discuss them, we talk about the 50-day moving average and the 200-day moving average. These are simple moving averages. Now, we're going to go on a bit of a journey here so that you can understand the implications of these crosses, what they can mean sometimes, and how other times they don't really mean much of anything. So let's go on a journey so that you can understand what we've looked at on the past in the channel, and that way you can be prepared for what could be coming here in about a month or so, depending on what the prices do. Okay, so the two lines here are the 50-day and the 200-day moving average. And, you know, typically a cross of these two moving averages is a golden cross if the 50-day is moving above the 200-day. So basically the short-term price movement over the last 50 days is moving above the average of the last 200 days. And that typically kicks off a bull market. Okay, it typically kicks off a bull market. Now, in the first cycle, we didn't have this golden cross because the 200-day moving average didn't start printing until January 2011, and at that point we were already in the bull market because you need at least 200 days of data to have a 200-day moving average. But what you will notice is that after this major move here, we had a cross of the 50-day and the 200-day moving average. At the time of the cross, the price was around $5. It's a little painful to look at the price of Bitcoin at $5, isn't it? The price was around $5, and from there it dropped around 61%. But let's not jump to any conclusions yet. What we're going to do is we're going to systematically go through every single market cycle and what various crosses meant. So then we look at the next one, and you'll notice that we had a golden cross in February. And what did that golden cross signify? Well, it signified the beginning of this bull market. And from the golden cross right here, from this cross, at the time, the price was around $575. And you can note that at that cross, the price of Bitcoin actually temporarily dropped. But we don't really care about short-term moves. We're looking at the overall cycle. And from that point, there was not another cross of these two moving averages until all the way over here, but it ultimately led to a modest, and I mean very modest, 22,547% after the golden cross. Okay, and then in this cycle, we should note that we almost had a death cross after the first peak. After the first peak, we came down to the 200-day moving average, but we did not actually have a golden cross. Or sorry, we did not have a death cross. We did not have another golden cross because they did not actually cross. They came close to it, and it looked like they were going to cross, but in fact, they didn't. The move continued, and once we had a death cross right here, the price of Bitcoin was at $455. But you should note that in this cycle, there was a little bit more volatility, and they actually crossed again. Okay? They actually crossed again. But what we could note is from the first cross, from the first death cross here, it dropped about 71% from that death cross. Actually, that's actually at the cross there, but if I actually go down to where the price was, well, we actually had a capitulation on that day. It was about a 52% drop from there, maybe about a 61% drop. But then what you'll notice is that as we move out, the accumulation phases tend to have some fake golden crosses. But they're not really fake. I mean, they're just doing what the price is doing. They're just an average of the price. But why didn't they mean anything? Well, when you have an accumulation phase that lasts a while, you just naturally get a cross of these moving averages because as the price chops sideways for a while, as the price chops sideways, like here, you just naturally get these crosses. And what you'll notice is that in this cycle, it was not the first golden cross that led to the bull market. It was the second one. So in this cycle, it was the second golden cross. In this cycle over here, it was the first one. And just for my own amusement, because we didn't have a golden cross over here, because the 200-day moving average didn't exist, we'll say 0. So the first cycle we had 0, then this one we had 1 before the bull market started, and then this one we had 2 before the bull market started. Would you care to guess how many it took in the last cycle, or in the current cycle, for us to get started? Would you care to guess? We covered this extensively in the bear market, extensively. 3. Go figure, right? Go figure. But why? Why was it 3? Well, we just had a longer accumulation phase. Okay, we had a longer accumulation phase. You just got more crosses here. We also had more intra-cycle volatility. You had one golden cross here, and then you had a death cross. And then you had a second golden cross, and then a death cross. And then a third golden cross, and then the bull market was up. So you had, if you zoom out here, and you look at all 3, you had 0, 1, 2, and 3 before the bull market really got kicked off. Because this one here was sort of like a mini bull market. I mean, obviously people have their reasons for why it did what it did, but if we ignore the news and just look at the chart, and maybe better yet, only look at the data starting here, and let's just pretend like the price of Bitcoin didn't exist before this. We had a nice move up, followed by a brief bear market. And then we get another nice move up. And now so far, we have been heading down. I mean, let's just call it what it is. We're not gonna call it something that it's not. Let's just call it what it is. It's been moving down here for a little while. And we've said that we could easily go for a period where Bitcoin at the very least cools off before continuing to move to 100K. And you know, for me, as I mentioned, I was always a little skeptical with how quickly things have moved up. But now that the prices have come back some, I am getting a little bit more comfortable with it. And I would say, you know, the lower the price goes, the more comfortable I will become with that move to 100K. I think it is important that institutional investors and larger investors have the opportunity to scoop up as much Bitcoin as possible at lower prices to help fuel the bull market to the 6-figure point. So we look at the last three cycles, and we note that, well, and in this one, I guess I didn't cover this one, but in this one we had the death cross, and from that cross, the price was down here. It bled about another 54%. So the first one after the major bull market, from the cross right there, it bled about 64%. And then from this one over here, from this cross, the price was around this point, and it bled about 60%. So 63%, 60%. This was about a 54% bleed. Now, my thinking, again, on this cycle, is that it's going to be drawn out longer than most people expect. Okay, so a lot of people are expecting it to just go straight to 100K and not look back. I'm a little bit more conservative. Again, we're going to keep an open mind on this channel, because the last thing we're going to do is operate in a deterministic manner and say it can't do something, because when you say it can't do something, that's when it typically does it. So maybe I'll say Bitcoin can't go to 100K tomorrow. Hopefully we will see that, but I don't think we will. Anyways, we're looking at this now. We're looking at a potential death cross. It has not crossed yet. There's no guarantee that it will cross. Also, we should remember too that in the event of a longer cycle, we could get these mini phases where instead of getting a long bear market, you just sort of get a brief one that might last about 6 months. Okay, I mean, look at this one from this little rally we had here to this intermediate death cross. It only took us about 200 days before the next leg to occur after that cross of those two moving average. It took about 200 days. So what I'm looking for now is, are these going to cross? Now, in 2013, it looked like they were going to, but they didn't cross. And why did they not cross? Because, well, Bitcoin bounced and it started moving up relatively quickly. But we also should note that it bounced off the 200-day moving average. Right now, we're actually below the 200-day moving average. And you can see that more or less we've been holding it as resistance here for a few days. So I think we need to keep a very open mind about where we are. If we were to sort of move these out, we could maybe speculate that they'll cross and maybe within a month if the price doesn't immediately rebound. Okay, so and maybe less than a month, right? Maybe a few weeks, maybe I would say 2 to 4 weeks. It depends on exactly what the prices do between now and then. I mean, if the prices tank, then the 50-day moving average is going to come down relatively quickly, and it's going to come down a lot quicker than the 200-day moving average, which is still going to be including a lot of this other data in the bull market phase, in this phase. But you can see that this is starting to come down relatively quickly. So unless Bitcoin is able to, go back to 50K, 60K and start really moving up, we will in fact have a death cross within the next month. And at that point, I don't know what the price will be. If the price is the price of where the cross is, let's say like 42K, and it is confirmation that things will be bearish for at least a few more months, like in 2019, before the second leg of the cycle, then maybe we'll see a move back down. And I mean, from this point over here, when we had this cross after this first leg, we can note that from that death cross, the price was here. It actually spiked up on that day. A lot of times the price in the short term does the opposite. That's something else we'll notice too. Look at this death cross. The price went up that day. Look at the golden cross here. The price actually went down that day. You'll notice this a lot here. A death cross. Price went up. A golden cross here. Price went down. So a lot of times on that day, the price can do the opposite of what you may think. But then the trend doesn't change, right? So this was a death cross, and while it went up in the short term, the trend was still down. This was a golden cross, and while it went down immediately, it then started moving back up in the not so distant future. But again, this was a lot of intra-cycle volatility here. That was a lot unlike, it was pretty unlike what we had seen in a lot of other cycles. So when we look at this potential death cross, we'll need to identify at the time where is the price, and is it going to be met by a bleed, upwards of whatever the last cycles were, or is it going to be more akin to a longer consolidation phase, where we maybe bleed slightly, but we have no major capitulations, and then we just continue the next leg of our journey. So at this point, we do not have a death cross yet, right? We simply do not have it. And if the price were to rebound and do something like this, then these two will not cross. They might come close to crossing, but they might veer off like in 2013. If, on the other hand, the price is unable to rebound significantly, I mean, I know some people are saying, okay, a rally to 40K or 41K was a relief rally. No one's getting out of bed for 41K Bitcoin at this point, I don't think. So that's not a relief rally to me, and until we get unless we get a move up to 46K, 47K, I'm probably not going to assume that it's a relief rally. Right now, we're just sort of playing in the sandbox still. So what I would say is we need to keep a close eye on this, because a lot of times these crosses are a signal, a more decisive signal, that, hey, we're not going to immediately move back up in the short term, and that at the very least we need to chop sideways for a bit. We could have some moves back to the downside. And if this plays out, I think it's fine. I really do. In the journey to 100K, I think it's fine. I think, as I've mentioned before, we had sort of this impulsive move early on, similar to 2013. If we compare the two, okay, so you have this first impulsive move, then you have that second peak, and then a third peak. The first impulsive move of 2019, this is our second peak, and I think we'll at least have a third peak later on. But you might also notice, too, that it's a lot more drawn out this time, okay? Because the speed at which the one in 2013 took place was relatively quickly. I mean, if you were to take a bar pattern from, say, the bottom here to that top and overlay it over the cycle bottom, we would have already put in the last peak compared to 2013. But that's why I'm saying this cycle, it looks similar to 2013, but it's much more elongated. It's shifted out. It's a much longer cycle than 2013 already. Because if it were like 2013, the peak would have been in December of 2020 as measured from the market cycle bottom. But imagine, you stretch this out a little bit, you can sort of see what I'm saying in terms of some of the similarities. I mean, again, it's not a perfect match here, but if you sort of just stretch it out, you can see some of those similarities that we've talked about, right? So you see what I'm talking about there? At least somewhat similar. Again, they're not going to be identical, but it does show you that they are at least somewhat similar in terms of a sort of a first little move, maybe a second peak, and then a third peak later on. But really, this one, most people wouldn't consider this to be a peak, just first peak, and then so this would be the first peak, and then maybe a second peak later on. So the first leg of our journey, the second leg of our journey. After the first leg, we did have a death cross. We did. I mean, it's true, we did. And we consolidated for a while. After this death cross, we had about, and again I said 200 days. So imagine a scenario where we do get another cross, okay? And let's say Bitcoin does something like this for a while, and then maybe eventually we get another golden cross. Let's go about 200 days out. Where would that put us? Maybe early 2022. So this again would be more in line with the cycle getting longer, not that immediate move to a $300,000 Bitcoin, which is one of the more lofty projections, or a $200,000 Bitcoin or something by the end of the year. And so I think as we navigate the cycle, we need to be somewhat open-minded. Are we going to get a death cross? And if we do get it, are we going to repeat prior cycles where we at least go down for a little bit and consolidate for maybe 3 to 6 months? Or will the price of Bitcoin get this V-shaped recovery and completely avoid the death cross altogether? These are the things we need to be looking out for, and we're sure as hell going to keep an outlook on them. Or we're definitely going to keep an eye on them on this channel to see what are the prospects for Bitcoin as we continue to navigate the rest of 2021. Will we get back above the 200-day and avoid the death cross? Or will we get the death cross and potentially continue to consolidate for a few months while we gear up for the third leg later on, which I think will take us to 100K. So the main two scenarios that I see are we avoid it and maybe we go to 100K sooner, or what I think is a little bit more conservative, and I like to be conservative with things and then be pleasantly surprised if they are more bullish. Or is it going to look something like this, where then we're gonna go up for our third leg later on, and then we'll look at this and say, all right, yeah, it was a double peak cycle. First peak, second peak, maybe even third peak if you want to count that one, and maybe it'll look something like that. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Remember, if you want to know how I'm navigating these markets, check out the sale on the premium list. You can find a link to that in the description below as well. You'll get access to weekly videos, weekly reports, the Telegram alerts channel, the Telegram chat room, the risk dashboard, the Into the Cryptoverse app, and more. Make sure you guys check it out, lock in the lower rate. Thank you guys for tuning in. I hope you enjoyed it. Leave a note in the comments telling me what you think. Do you think we're going to have a golden or a death cross, or do you think we will avoid the death cross? Make sure you subscribe, give the video a thumbs up, click the bell icon to turn on new notifications, and I'll see you next time. Bye.